There's a warning that you should know about car insurance and home insurance and personal insurance in general. The shift of insurance is becoming more data driven than it has ever been. Now, there's always been a rule, it's called the law of large numbers, where insurance companies have millions of people they insure or hundreds of thousands of people they insure, and they can pinpoint what the cost of certain areas will cost. The average claim, all of those pieces, which cars cost the most, things like that. Those are changing a little bit to be specifically driven. They're not taking as many chances in areas that they used to. So you're seeing where the rates have gone up drastically because they've said this is what the price is for this area. Here's a few reasons or a few causes of why that's happening. One is the clear obvious is the shift towards automation. Now this industry has already been in automation, whether you want to call it AI or automation, those are technically two different things, but they've automated most of the processes many years ago. That is something that they're doing what's called a workflow, and they're speeding those up as AI starts to take place. The second is what we just talked about, is being more AI driven towards underwriting. Now, underwriting is a decision that a person usually sits down and says, is this risk worth us taking? There is a benefit. If you actually watched a movie years ago, I think it was Yes Man, where he was a banker and he always had to stamp no half of the time. And all of a sudden he had to say yes to everything. So he was stamping it all and he got promoted because all of a sudden, all of these small businesses that were micro loans were getting yeses and they were making money and paying back the loans quickly. And the bank actually thrived. Now that's not necessarily a true scenario, but it's a really good example of what a human can do and give you the exception of many scenarios to where your AI is just going to say no. Does it fit our guidelines? If it already knows no, 10 seconds later, it just knocks it out and says, this is not a fit for our carrier, go to someone else. Now, if you have the right agent, they can call that company up if they understand, wait a minute, I've got people insured that do this. Let's talk this over. Let's figure out if this is still a good fit. And that's where that agent's going to come into play the most. If you are looking for a new agent, I'll put a link in the description below where you can work with an independent agent. They can do that with multiple companies. That way you can find which is the best fit company, which is going to give you the best price, all of those things. I'll put that in the description below. The third you're going to notice is that there's UBI is everywhere. And I actually like the UBI. It's called usage-based insurance. It's telematics is what we call it in our industry. And it's them watching your driving habits, watching your habits, maybe a company, a truck driver having a new device in the vehicle that the manager can take track of. And it essentially gives you a reason to drive good, but it also teaches you how to drive better. And if you're already a really good driver, you're just going to get a discount. They let you drive for 90 days. They watch your braking habits, your acceleration habits, where you're going, all of those things that would make up that risk, that data that they can determine is good. Then they're going to use that to give you a discount for being the better version of what they're looking for. Now, data has always been the currency. That's always everything. Whoever has the customers, whoever has the data lists, they just sell them. Like it's commoditized. And insurance companies don't necessarily sell them to other carriers because they just lose their customers. But them as a specific carrier are always trying to get the most information to do that law of large numbers, to see the growth and the potential, the risks, the weather, everything that they can think of. They're trying to make sure that they have the best product for the best risk that makes them the best carrier. That also includes the newest version, which is real-time integration. And that real-time integration is AI, or the feeding of data coming in live. Carriers want to know how many people are being quoted with them, how many people are competitive, who are they losing their business to, why are they better, what are they doing different, how can we compete. All of those pieces help them not only determine what companies or carriers or people that they should insure, but it also knows which ones they shouldn't insure, and also who's winning the business over them, because there is an interlocked mix to where people are better fits with some companies, but sometimes a ton of companies are really good fits for some people. And that's where it starts to become more geographical and geographic in location, where they realize most of these people are really good in this area. We want to market our product to that area. Now, there are laws and guidelines that are restricting some of that, because if we only insure really good in one area, that's almost discriminatory, and the government understands that. So there is some rules and regulations. That's why Facebook can't do certain things with certain types of marketing. If you own a home, I think there's actually a restriction on that. If you're a realtor, there's all of these things, like, because they were targeting specific niches and people, it was almost like people that wanted the help couldn't get it. And that makes sense. The data does give us too much information to where it almost makes you monopolize, I don't know, it makes you a powerful player more so that it's just uncompetitive. The biggest piece that people are using is the fraud detection, and that's starting to become big now. It has kind of been big a little bit ago, but it's more so now. I would say they're doubling down on fraud. Insurance carriers, you'd be surprised. I know a few large ones, like major top 10 companies, that have not had a fraud department that was more than just a person looking at a couple policies every few hours. Now they have AI built in. They're starting to find these things. What are these trends? They have departments and teams. I've got friends and family members that are on those teams that I'm starting to notice, like, oh my gosh, I can't believe they didn't know this 10 years ago, because that was a huge thing. There's so much benefit of finding the fraud that makes your rate better, because when there's less fraud, that means they don't have to charge as much because they're not losing, money's not going out to the people that are frauding you and us and the carrier, to the point where it just makes sense to raise the price. So what are you going to see as a customer on the differences between these? You're going to see three things. You're going to see, one, personalized policies. As we go further and further down the road, a lot of these AI systems are going to be built around the common person. It's essentially becoming more individualized because AI can do all of those things. You might even have your own little assistant that tells you what carriers, and I'll be obsolete at some point, and you'll just know. It'll just do it for you. The other part is we're starting to see what's called a subscription or an on-demand insurance, where if you need it now, if you need it yesterday, you get it now or yesterday, pending they'll check the fraud and all that stuff. But it's going to be a benefit. I've actually got some companies that work directly with certain carriers or certain car companies, and they give you a discount instantly because they know that car has been driving this much and it does this many miles and it brakes this hard. And some of the data that those vehicles are getting are already giving you a discount on your insurance. And the third is agents are starting to become smart. We actually have another channel. I don't want to say it on here because it's more for agents. It's supposed to teach them how to help you guys better. And it's a lot of technology. It's what we call a CRM, a customer retention model or management or whatever language. And it helps talk to you guys so that the agent can do the work on the back end. It gives them time freedom where they can do all of these quotes and try to build them up without having to just shove you in and try to hard sell you on insurance, to where it can be appointment based, where you can actually talk to the agent, where they can spend time working on your quote instead of having to quickly try to sell you because they know another guy's going to call you to try to pitch you as well. If you do it correctly as an agent, then you're not going to necessarily discount everything and try to knock the coverages down just to get you a quick deal. It's going to hurt you in the long run, and a lot of agents don't care. There's a lot of people out there that are call centers, and they're just trying to make that quick buck. $10, $20 a sale, they put it in their pocket, they're happy. You get cheaper coverage, which actually hurts you if you have an accident. So digital first is essentially what's happening, and that's a benefit to you if the agents are using it correctly. Let me know what your thoughts are. Have you noticed that your insurance carrier is starting to change the rates or is starting to adjust pieces based on data? You're starting to see a lot of articles about wildfires here, hurricanes here, different things. The geographical pieces, how are those affecting people in non-geographical areas that aren't having those issues? Is that large company sharing the data and sharing the cost? And how is it affecting you directly? Again, if you are shopping for insurance, I'll put the link in the description below. If you want another good video to watch, that one will be great. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.